Here we are in another daily review. Welcome for your dose of information from the world of crypto and blockchain. Today, among other things, we bring you Bitcoin jumped over $68,000. Is a correction coming, or is BTC unstoppably rushing towards a new all-time high this month already? If you look at the last halving cycle, the leading crypto from October of 2020 jumped from roughly $10,000 above $60K in just 7 months. Analysts revise previous forecasts. BTC's new all-time high is coming even before the US presidential elections. Stay tuned for the next few minutes of the daily review, only here, only on Cryptoverse News. After yesterday's unsuccessful attack on $68,000, Bitcoin jumped above that level today, increasing its weekly gain by 10%, and at the same time recording its highest price in about 2.5 months. BTC seems increasingly inclined to reject its consolidation range, but the key question now is whether it will be able to move 68K on support. A rejection could cause a correction with accompanying liquidations of long positions, which would pull the price towards $61,000. Failed breakouts often lead to price drops, especially when the market is this hyped and overheated. Namely, strong jumps bring more and more owners of the leading cryptocurrency to the position of unrealized gains, which is often considered a sign of an overheated market, which usually precedes or coincides with price corrections. As a result of this on-chain signal, Bitcoin could slide in the coming days if investors decide to book their profits. And that profit-taking could really happen soon is also suggested by data from the on-chain analytics platform Glassnode, which show that on the largest global crypto exchange, Binance, short-term holders of Bitcoins, that is those who hold a certain amount of BTC for 155 days or less, have transferred to their wallets the largest volumes of the leading cryptocurrency since it set the record of this cycle in March of this year. Additionally, open interest in Bitcoin futures rose to an all-time high of $38.4 billion today. When the previous high in September was reached, Bitcoin failed to break the resistance at $66,000, and a correction of more than 10% followed in the next few days. However, it should be noted that strong open interest cannot be considered an inherently bearish or bullish signal, but its increase rather creates volatility in the price of a particular asset. So this is a more pessimistic scenario in the short term, which is by no means certain, but which should not be shunned upon, and which, if it were to play out, would be a completely normal stage in a broader bull cycle and a kind of market cleansing before new attacks on the all-time high. Of course, it is entirely possible that Bitcoin's breakout will continue and that investors, anticipating an upcoming new record, will not decide to sell, at least not to a greater extent, and that BTC will continue its multi-month rally. After all, if we look at the last halving cycle, that's exactly what happened. From October, Bitcoin was climbing unstoppably from roughly $10,000 to jump above $60K. That is, it rose 6 times in just 7 months. Obviously, yields decrease with each new cycle, but despite a possible milder rise, the trend could correspond with these historical patterns. We should also not forget that in this cycle, for the first time, we have billions of dollars pouring into crypto through ETFs, but also potential billions of TradFi dollars that are yet to come into play. And these spot Bitcoin ETFs, in the just last 2 days, recorded a net plus of almost $1 billion, which further confirms the bullish sentiment and the strengthening of investor interest, and to a large extent erases the problem of the previously mentioned this week's increase in the flow of Bitcoins to crypto exchanges by short-term owners. If we look at the broader picture, that is, a broader time horizon, a continuous decline in the amount of BTC on the stock exchanges is definitely noticeable. And although Bitcoin has yet to definitively confirm its exit from the 7-month-long consolidation, the signals are growing. The dominance of BTC is thus stronger and has now grown to almost 59%. The price, however, after diving below $50,000 on August 5th, forms higher highs and higher lows, and the mood on the market is increasingly optimistic. The index of fear and greed jumped to 73 points, and last month it was only 39. And the crypto market in general is also maturing, Coinbase research shows, which is pushing investors towards Bitcoin. From the incredible success of spot ETFs to the rise in on-chain activity to the increase in trading volume, it is clear that the markets have become deeper, more liquid, more sophisticated, and more accessible, and investors are focusing on higher quality assets, according to the Coinbase report. This makes the crypto market less volatile this year. For example, the 3-month volatility of the spot price for Bitcoin fell below 60%. This is significantly lower than the peak of almost 130% reached in 2021. This transition signals a more stable environment for the leading cryptocurrency, and this attracts institutional investors. Accordingly, the report showed that monthly Bitcoin trading volumes have averaged $2 trillion since the beginning of the year, a growth of as much as 76% compared to 2023. Going back to October, given the excellent entry into the second half of this month, there is a growing narrative that the leading cryptocurrency will leapfrog the current all-time high of $73,700 even before the U.S. presidential election. As a reminder, they are scheduled for November 5th, which means that the new record should come either this month or at the very beginning of the next. Bitwise's chief investment officer, Matt Hougan, predicted exactly such an outcome in his latest weekly note and revised his previous position. Hougan wrote that after BTC's rise to $67,000, he is no longer sure that market participants will have to wait that long before the price rises to the $80,000 target, as investors will not want to miss the opportunity when the leading crypto takes off. The multinational bank Standard Chartered predicts a new all-time high before the U.S. elections as well. The bank's head of research, Jeff Kendrick, predicted that Bitcoin could rise to $73,800. He explained that this could be due to several factors, including increased interest in spot Bitcoin ETFs and the effect of Donald Trump leading in the polls. Like Hougan, Kendrick highlighted the possibility of BTC rising to $80,000 in the short term. And he previously predicted that the crypto king could reach $150,000 by the end of the year if Trump wins the election. And that would be all for today. With these predictions, we have reached the end of another Cryptoverse Daily Review. If you liked the video, please give it a like, leave a comment, and it also won't hurt if you click subscribe. Thank you for following, and stay tuned for the upcoming weekly report. Kind regards, till Friday.